4, 3, 2, 1. Kind of a long. Okay, I think we're having some difficulties here. What's going on? But let me check it out to make sure we're live on LinkedIn. And we are live. Welcome to the Tech Behind FinTech. Really excited about our show today. This is an episode. This is a show where we discuss the technology behind financial technology, FinTech for short. Let me do some housekeeping stuff and adjust our background. And yeah, today's episode is a really exciting episode. I can't keep saying that, I know. And here is why. Today I have a special guest, Herb Barr. Herb is an investor data solutions architect with over 20 years of experience in architecting solutions for billion-dollar asset management firms. Herb specializes in structuring investor data and partners with investor relations teams during their most ambitious capital raises. On the weekends, you can find Herb at Hackensack Brewery, which he co-owns with friends. Welcome to the show, Herb.
I can't really compete with that sort of introduction.
I mean, yeah, that's your intro. That's it. Oh, and a part that I totally skipped over. He's also an advisor to Strategic Generation, which is my firm, and we've been working together for years with different private equity client and asset management firms. It is really great to have you on the show today. I'm excited about this.
I'm excited. It's nice.
It's a long time coming.
Yeah.
I mean, we talk so much offline about this stuff, and also talk to clients and stuff. And today's topic. Let me get into that. The costly data architecture mistake made by investor relations, and we're going to get into defining that for the audience and talking through it. Real quick, I just need to do a little housekeeping on my side, on this, because sometimes people join the chat and we cannot see their name, so I just need to open it up on the side. So we're going to definitely get into that. As everyone knows, well, if you're new to this show, you don't know, but if you've been on the show before, how we structure it is we go over a news topic of the day that's around FinTech, financial technology, and then after we get into the topic of the day. So the news topic of today, I think everybody can guess what that news topic is. It starts with a G and ends with a P, right? GameStop. Let's get into GameStop. It's crazy this week what happened. I think even though we don't get into the business side of things, it's more technology focused. I just think it's definitely appropriate to mention them due to Reddit, social media, due to the trade stopping on Robinhood and so forth. So if you have not heard about it, let me just catch everybody up. Reddit essentially increased by 1,600% between January 11th and Wednesday, January 27th, mainly due to retail investors going hard on it in a stock that was really shorted by hedge funds. So it really puts the institutional side and the retails at odds. It's just very interesting. Also this week, what happened, Robinhood customers, a lot of the retail investors, Robinhood basically disabled trading on GameStop. You can still sell it, but you couldn't buy it anymore. And it's also important to note, 56% of Robinhood customers owned at least some GameStop stock. Herb, what are your thoughts on that?
Genius. Squeeze was genius, right? It probably, if it doesn't go on daily, right? It's just reverse. It was controlled by the people this time. I think it was genius.
Look, in working in this industry at different investment banks and different firms like that, I think what we're seeing in 2021 with this move is a huge shift, right? Like if we look at what happened over time, you have multiple exchanges coming up. You have information that's available to everyone. You have these social media platforms where people could essentially get together in large masses and invest as a single unit. I think what happened this week, because GameStop, also note, right, GameStop wasn't the only one. We had AMC, we had Nokia. I mean, stocks that were not doing too well, basically, it rose up because it was a concerted effort by retail investors, everyday people, to invest in these stocks and blow them up. And on the opposite end, you have some hedge funds that lost a tremendous amount because they were shorting those deals.
Yeah, I mean, it's from a technology perspective, it's because of technology had happened, right? People had access to information. They had access to the fact that, those particular stocks are being shorted so heavily, right?
Yeah.
Without the technology, without the internet and all the forums, no one would have had that information other than the big guys historically.
I mean, and that's what's really been happening over that historically. That's always been happening. So this, I think the rules are going to be different moving forward. I think I joined the Wall Street Bets Reddit group just to see what was going on and to understand it. Ironically, a personal note, right? One of the stocks was Nokia. I've had, I mean, not a lot of it, just for years. Just never thought about it because it's just been there. So it's interesting that just got traction randomly. So very, very interesting.
BlackBerry. Who would have thought BlackBerry?
Dude, remember back in the days when like BlackBerry was the iPhone, when everyone had a BlackBerry?
Right.
Like that was like, and it took me so long to give up my BlackBerry. I was like, I held on to the BlackBerry as long as possible. You know why I loved it? The battery just never died.
No,
I could keep that thing running for like a week.
The BlackBerry keyboard was hands down the reason.
Oh yeah, no, totally. It took me. I think we're dating ourselves because there's a whole generation of people who have no clue, like even never even used. Like, can you imagine, like the kids, even your son, like the concept of that is like, what are you even talking about right now?
Yeah, pre iPhone era.
Definitely interested. Listen, that's really the news topic I wanted to cover today. Definitely, audience, chime in. I'd like to get your thoughts as usual. Feel free to drop comments on anything that we discuss. So let's get into the topic of the day, because I think we're going to spend a long time talking about that. So much to unravel, and I want to give us enough time. So I'm not going to jump into additional news items today. So what we're really here to talk about is, like we said before, right? The costly mistake made, the data architecture mistake made by investor relations. So I think it's good for the audience if we just give some background, right? So the investor relation role, it has different flavors to it, right? You have public companies that have an investment relation officer or an IR working on behalf of their shareholders and so forth, right? They're the public face between financial analysts, the street, and the communication, and they can really impact the valuations of that firm. That's what their role is. You have like an investor relations / capital intro team that works mainly with like prime brokerage, and they have many different hedge funds underneath them, and their job is to really do a lot of capital introduction. I say capital introductions, they want to raise money for these hedge funds, but they're introducing them to capital, like limited partners that may run an institutional from an institutional investment or pension fund or something like that. What we're talking about today is more the IR team that's in the private equity space, that's responsible for raising funds, essentially sales, and getting capital for that. I'm going to let Herb jump in, and I want to just drop a quick stat on that, to just understand the level that we're playing with right here. As of 2020, right, private equity firms were sitting on 1.5 trillion of unspent cash. The global private equity assets under management in December 2019 was 4.5 trillion. The projected predicts that global private equity assets under management will reach 9.11 trillion by 2025. So those are huge numbers, and understand there is an effort on various IR teams and people who and different fund managers to raise that capital. So they're actually getting that capital for fund investment. And that's what we're really going to dive in today are those particular teams. What are your thoughts to add?
Yeah, so that's a lot. I have been preaching this forever, and I think that from a capital raise and contact or customer, whatever you want the C to be in CRM, I think what people are doing wrong is tracking people. They're tracking wallets, right? Like if I know that you're a high net worth individual, I'm assuming I need to track you, and I don't believe that at all. Right. I think you should be concentrating on tracking a relationship. Right. So the relationship with a firm versus Nnamdi the guy. Right. So I want to track a relationship with strategic generations. If my point of contact should happen to move, I still have a relationship with that firm and with those dollars.
And it's interesting that you put it that way. Right. Because historically, and looking at certain places and clients, everyone's focused on that individual, right? So so like
an example, and just to spin off like outside of say finance is something that I do on the side with the brewery. It's like, are we looking at like customer retention management, right? I just want to keep the same set of friends. Right, no new friends. Right, I don't want to broaden my horizon. Or is it customer relationship management or client relationship? I want to build a relationship with your firm so long term. When I decide to grow, I want to reach out to you for future investments, future commitments. It's not with a point person. It's with the firm, and I think that you need to structure your data in whatever CRM system you use to reflect that.
And like I said, we've had this conversation offline many times, and I think it's definitely a different way to look at CRM systems, right? In the field that we're in, there's specialized or targeted CRM systems for that industry, so you can manage your fund and your different contacts. What are going the route, right, of tracking the person, the individual, as opposed to the entity or the company? What are some things that can go wrong with that?
Oh man, my favorite keyword in the space, people moves, right?
Yeah.
You build a relationship with John Doe, the allocator. Well, what happens when John Doe leaves that firm and goes somewhere else, and all of your contacts throughout your database is saying you're related to John Doe? What if John Doe leaves the industry altogether, right? So now your pipeline process comes to a screeching halt because you didn't pipeline to a firm, you pipeline to an individual. I think that's just fundamentally wrong from building your network as far as your business network, your strategic pipelining network. I just think it's wrong to pipeline to an individual.
And it seems costly, right? Because at the end of the day, sales, whether you're selling an item or you're actually selling your concept for your fund to get investors, it's never a one stop. I'm going to call you and you're just going to give me your money or buy my product. It is a constant contact, follow up. And sometimes the sales cycles for some can take months. Some depending on what it is, it might even take years. So
yeah, and I like what you just said. Like, you're not thinking of it's buying a house. It's anything that you do. It's not I go in and say, hey, give me $1 million and you give it to me. What about the life cycle of that investment? I'm probably speaking to your lawyers. I may be talking to somebody else that manages your estate funds. You may come through a consultant. all of these people, the 4, 5, 6, 7, 8, 9 people that are in line before you actually sign that document and give me your money, I want to track all of that information, all the email correspondence, all the meetings, any documentation I sent to you. But that's still under the umbrella of closing that singular investment, right? So I really think you're never really tracking an individual or marketing to an individual, unless it's, Musk or something like that, which in that case, you're not talking to him directly. No. You want to build an umbrella even over an individual.
What are some things that the team can think through? I mean, obviously, we're not talking about them actually going out and selling. They're very proficient, and that's what they are good at. But what are some of the questions that they should ask when structuring their data, when implementing a new system?
Wow, that's a good one. I mean, I start with, you really start in 2 directions, right? Your pipelining has to work, right? These guys raise billions, if not trillions of dollars with calculators, pens, and paper, right? So they know what they're doing. But when you start to think of, you launch a fund and then you may have a follow-up series to that fund, right? Like Fund 1, you may do a Fund 1A 2 years from now, a similar product line, you want to reach out to those same investors to see if they want to give you more money, right? If you had good performance, how do you do that, right? If you get institutional money and your point person may have left that firm, you just left that money sitting on the table, right? So I think about it from a pipelining perspective, but then I also back into it from, okay, now I have this money, I have this capital, I want to track the dollars, and that's probably a whole other discussion. Like, how do you structure accounts to reflect the money that you've taken in?
Wait, let's hold that, because that sounds like a title of a next episode that we can do in the future for sure. I like that. But getting back to the individual and the entity and structure, because I like your point that, okay, look, we're in a global pandemic where we're just, from a global perspective, people are going through different situations. So the same person you're speaking to, if you lose that contact for whatever the reason may be, how do you still build on that relationship with the entity? How do you,
and that's what I think that people these groups should be focusing on, building the relationship with the entities, not with human beings. I don't think it's kind of, old school, hey, I was in this frat with this guy is now a fund manager, so he's going to give me money. The world is different, right? The internet has opened up people's access to everybody and to everything. So when you're building these relationships, I'd much rather say, I have a relationship with, I don't know, Merrill, right? Not a human being. I have a relationship with the firm because this person worked there. When they leave, that if I've done it right, that relationship should persist.
Then the question I would have for you, let's play that scenario out, right? That person, your contact, leaves Merrill, but now they're gone. The entity Merrill is still there.
Sure.
And I guess it's then establishing a new contact and then leveraging the past correspondence to link in with that data.
Yeah, and if you want to really get nerdy and techie,
that's why we're here. That's why we're here. We're here to get nerdy and techie. That's the point.
Your correspondence is an activity, right? So what was that activity? I sent an email. An activity is not just a meeting or a phone call. Yeah. I sent an email. That's an activity.
That's an activity.
Who did you send that email to? I sent the email to John Doe, who happens to work at Merrill. So when you're relating that data and building your data web, that architecture, you want to relate that email to Merrill. Right? John Doe leaves Merrill, but when I do a search for Merrill, I sent them 30 emails. Yes, I sent it to a particular person, but that person's gone. That doesn't mean the relationship's dead. My history is still sitting with the entity. And I think that a mistake that people make is treating individual investors different from institutions. Treat them all the same. If a guy's got several $1 million, he's an institution. Once he starts giving you paperwork, he's filling out things with tax IDs versus his social. He's already telling you he's a business man.
So reminds me of a J line, right?
Flip that
business. Yeah. So I mean, but let's think through that scenario now. We're not the marrow or that, but the individual that has a high net worth individual. How do you structure that? So a couple of follow-up questions I have with that, but let's just get into how do you structure that from a data perspective? Do you create an entity for him and then he's the contact for that entity?
Yes. Okay. He, as well as others, are contacts, right? His assistant is a contact within the entity that is him.
Obviously, I have the cheat code because we work together and we have this conversation 1,001 times. But I think for the audience, it's important to bring that out, right? Because what we see with some CRMs is that high net individual is a contact. This other person, his assistant, that's another contact. But the central linking them, like how are they joined? Like, but creating a single, let's go through that.
Another way to look at it, right? If you think about cold calls, right? It would bother me if I got 3 phone calls from the same firm pitching me the same idea the same day. And it happens because you're saying, I have this database of 30, 40, 50,000 people. I'm pitching a product. I have 80 sales guys. They're all just picking through this database. What if 3 sales guys pitch me the same product? After the second call, I'm mad. Even if I'm interested, I'm just going to say, hey, I told the other guys no. Why don't you guys share notes? Versus if you structure me, I'm an entity, and everybody's logging their calls. Mary, John, and Steve just lobbed the call into Herb, the company, via the same contact. It should stand out like a sore thumb. This project I worked on years ago with a manager that really helped me to put together this data model. We called it air traffic control. And the whole concept was, while you're logging your calls, your cold calls, your phone calls, your meetings, if you tag it to a product as well as an entity, and that entity shouldn't be a human being, it should be the company that this human being represents, which could be one and the same. You get emails, you get alerts, you start getting notifications, say, hey guys, you're talking to the same entity about the same product. And that stops the annoyance calls.
Yeah.
Right. And that was a big win for us. That was a big win. And it also freed up time for our sales guys, right? Why do you have 7 people chasing the same big fish?
I mean, not only time, efficiency, and it also, it's like a relay race, right? So even if you have 2 people randomly calling that same person, I'm talking to you about something different than the other guy just talked to you about.
Right. You can do a proper handoff, which actually looks really professional. I spoke to you, you showed an interest, but then I backed off because whatever. You're a Mets fan, I'm a Yankees fan, and we just didn't click. But if I log my notes right and I log it against a firm, you might put a call into your guy who that's at the same firm and have some really nice talking points, even though you spoke to a different human being.
Mutual friend just gave a thumbs up. A shout out to Mike Green. He's watching us. Always have to, thanks for the comments. So comments and questions are always accepted. No, totally get that. And with you, definitely, if someone is a Mets fan, you're going to have a lot of problems with it anyway. Right. So that's why you threw that in, because you're a diehard Yankees fan. We know this. Surprised you don't have the Yankee fitted on right now.
It was taken off intentionally. Go on as soon as this is over.
Okay. Making sure. No, I mean, what are some of the tips right now that you can share? I'm a business guy. I'm not technical. I'm on the investor relations side. We're getting this new CRM system. What should I tell my technical people that is going to help me develop it? Like, what are some of the things that I should mention?
Wow, now that's a big one. So now, if you're talking vendor selection around CRM products,
not vendor selection, because I mean, look, we're not yet. I mean,
yeah,
you know, we're going to give full disclosure.
Not even a particular product, but if I were looking at a host of products, things that I would look for is the first question I'm asking them off the bat is, how do you manage people moves? And if they shudder for a half a second, that's not the product for me, right? I can go through a list of the most popular CRM solutions available, right? I've sat in the room while they were doing product reviews of their products and sat in the front row and just started with that question: how do you handle people moves?
Like I said, I have the cheat code. We've had this conversation. I love when you ask that question.
Right, and I've watched probably the leader, the biggest one in the space, cringe when I ask that question. It's like, somebody get this guy out of the front row. Right. Their answer to people moves is usually cost. Right, some sort of custom development, and some have nailed it. Right, there are some products that they've nailed it with add-ons. They've nailed it with strategic partnerships. Right, but there are products that out of the box can handle the movement of a human being. Right, a lot of IR teams or capital formation teams, they subscribe to these services that really try to track people, right? To say, these are the big allocators that are out there. These are the people that work for. So you're not making cold calls. They're telling you who you should possibly call. That data's stale. A good sales team has data that's more real time than anything you're paying for in the market. So I'm really thinking, like, how do you handle it? If you're telling me that John Doe is at this company from A to B, well, what happens when they move? Where is my data? Is it sitting with the old company, the new company, or both? And how they answer that question for me is really how I'm going to decide what platform I'm going to put my data in. Another big one that I would start with is, what's your, and this is probably a little technical or a little industry specific, but how do I promote from a pipeline all the way through to an investor account? What's the full life cycle? Right. So you're pipelining. What does 100% mean? 100% means I have your money. But the relationship doesn't end there, right? I may move from my sales team to now truly my client service team, which somehow all falls underneath the investor relations or capital formation umbrella. So I would really think about, what's the life cycle of the pipeline entry. It should progress to an account, but it doesn't end there. You may re-up, you want to get more money from them, hopefully down the road. You want to track their performance. You need to give them statements. You have to do regulatory filings. All of that stuff is built off your initial pipeline.
No, I mean, that's definitely good information. Let's say I already committed to a CRM system, and now I want to take the things that we've been talking about now and figure out how to improve my pipeline, figure out how to track people moves, add that in. If I don't have a CRM system that natively does that.
Yeah, I mean, I think with manipulation, any CRM system can do it. And I've done everything from old ACT databases to DB2 to Microsoft Access to the big players that are out there now. I think a fundamental thing is, even if you're coming out of spreadsheets today, if you're tracking at a human being level, stop right now. Create an institution for each one of those individuals. Moving forward, track your relationships there.
Nah.
Even if it's as simple as you have duplicate entries in your CRM, one is a contact entry and one is a company or entity, whatever you want to call it. I mean, the term company is so generic. I just like entity, because then you can start to group your entities and say it's an individual type entity or it's an institutional type entity, right? This, you get everybody in a singular bucket. And when you're pipelining, you just go to your entity bucket. You never even look at contacts.
Nah, this is really really good stuff and really good food for thought. I mean, and look, shameless plug. Obviously, that's what we offer. So these are good questions that I think that clients should be asking and thinking through. Because if, as you said, and what we talked about, right, risking that relationship because of data, right? It's just because of your data architecture and how you structure it.
You're
after you've done the hard, leaving so much.
You're leaving money on the table, just by not maintaining that relationship with a firm, you're leaving future money on the table, period.
Yeah, and when you now start getting into the billions of, it's not a manual effort anymore. You need things automated. It's not calling a few people from your phone. It doesn't work that way.
It's a race. It's a race. You have allocators now that are sitting on money they have to get rid of. I have to put this money somewhere. Now it's a race. Whoever's got the most information, whoever's got that pipeline structured correctly, can now integrate with other systems. You can tap into your frequency. You can tap into all this data that's out there, but that data is related to the company, right? In the end of the day, the data that you can buy, and it's super expensive, that these IR teams are paying for, that information is related to an entity. It's related to a tax ID number at the end of the day.
No, I mean, that's I've always loved that. Like I said, you've coached me on this for years, and we always have these conversations. Treat the entity and the individual separately, and map the individuals or contacts really to that entity. And I think it's just so important, especially like what we see a lot is clients sometimes leaving one system and go into another. So then we have to take their data out of that system, perform some sort of normalization aspect, and import it to another system. And I think the things that we're talking about now it's really good food for thought to like, how are we structuring that? How are we structuring that relationship? Are you separating the entity from the contact and so forth? So no, I definitely love it. I've always loved your concept about that over the years of us working together and things like that. I always thought it was very refreshing and different because prior to us working together, I never thought about it like that. It was always about contacts. And then
I think we've all had the type of job where it was, let me see how many human beings I can get, right? So it's a percentage game, right? If I know more people than you, I have a better chance of making a sale, right? Think real estate. But if I have an in with a company, you can't compare that value, right? If I'm tracking you at an email group, if I track you by your email, and this happens all the time, people log into their banks, they log into, you log into Zoom with your email address. What if it's your corporate email address and you leave that firm?
Oh,
you're starting your life over, right? That email is shut down. So is that really your ID? Is my email address really my thumbprint? It's not.
No, I definitely real interesting stuff. Well, we are at we always go over in the show because if we get deep into conversation. Herb, we have to have you back on. Right now, I think this is really just scratching the surface to give that side something to think about. Now, a next episode we do together, definitely want to explore some of the topics that came up, especially now tracking that entire process after the funds have been allocated. How do you now maintain that relationship? And automation is key, obviously, and so forth throughout that life cycle.
Yeah, another shameless plug. I had a pleasure of working for someone who wrote a book. It was called After the Trade is Made. It was the best book I think that I ever got when I first started working. This is 20-something years ago. And I've always thought about the title like After the Pipeline is Entered or something generic. Like what happens? Yeah, you have a pipeline entry, but that is just the beginning. That's the tip of the iceberg.
I love it. I love it. Maybe I'll have you on talking about your next book and
hopefully
promoting it. I love it. Yeah. I would definitely be a reader of that book. So I think it could be helpful.
I hope they share my book and people on Reddit push me through the roof.
Of course. Listen, thank you very much for being a guest. As always, like I said, Herb and I have conversations like this offline all the time. I mean, he inspired my passion with that whole data stuff and working with visualization for the company. And like I said, he advises our company, helps us out with clients. So it's really good to have this conversation for the masses to see, whether live or in the future, because it's, videos are forever now. So thank you for being a guest. I look forward to having you as a guest on a future episode. And yeah, man, this was good. Good conversation.
Yeah, good talking to you.
Always. You have a great weekend. I'm sure we're gonna see you at Hackensack Brewery this weekend.
You will see me at Hackensack Brewing unless the stock continues to do what it does, and I may retire.
That's what's up.
If they allow me to buy some GameStop.
I think even if you retired, you still be at a Hackensack Brewery. I think that's the clubhouse, man. It's a good vibe over there. I like it. It's pretty dope. You have a great weekend, and you take care.
Thank you as well.
Guys, thank you for tuning in at another episode of the Tech Behind FinTech. Cheers.